Watch this entire script, don't skip, because what you're about to hear could challenge everything you think you know about the Iraqi Dinar and Electo, Vietnamese Dong contract rate rumors and how currency markets really work. And if you're a holder of IQD or VND, you need to hear this now, and be sure to smash that like button and hit subscribe so you never miss real updates backed by facts, not hype. Today we're breaking down the latest reports circulating in financial circles that contract rates for the Iraqi Dinar and Vietnamese Dong are now active. And while some creators and channels are shouting, this means a massive RV or revaluation is imminent. We're here to cut through the noise and explain what contract rates actually are, who uses them, why they don't guarantee a public RV or cash-in event, and what you as a viewer actually need to watch for next. Contract rates in the banking and finance world refer to internal or negotiated rates that large institutions, government entities, or corporate clients might agree to under specific terms, often with restrictions and longer-term holding arrangements, and are not the same as the public retail exchange rate you see on currency converters or at your local bank. And while leaked memos or screenshots may show higher internal pricing, this usually reflects a private contractual arrangement rather than an official revaluation of a currency that affects everyday holders. The Central Bank of Iraq has recently confirmed that the official exchange rate used for government accounting, the 2026 budget, remains at approximately 1,300 dinars per US dollar, a rate that has been maintained for stability and fiscal planning and does not equate to a sudden jump in value or global revaluation. And many reputable sources emphasize that there is currently no verified announcement from the Central Bank of Iraq, the State Bank of Vietnam, or the U.S. Treasury regarding a public revaluation or official cash-in programs for IQD or VND. Official rates like this are used to balance national budgets, manage foreign reserves, and signal monetary stability. And the fact that the rate is reaffirmed for 2026 simply shows continuity. It's not an unexpected revaluation event. In practice, the rate you might see quoted for IQD to USD on open market tracking sites or currency converters reflects day-to-day trading conditions and often differs from official rates used in government budgeting and internal contracts. That gap can fuel rumor and excitement in online communities even when nothing formal has happened. With the Vietnamese Dong, similar internal contract rate chatter is making the rounds, but here again, unless an official central bank release confirms an official change, any contract rate activation is at best an institutional pricing mechanism and not a currency revaluation that impacts public currency values or guarantees profit for holders. Another key distinction to understand is the difference between contract rates, program rates, and retail exchange rates. Contract and program rates may be shown in internal bank systems or for specific clients, but retail rates, which consumers actually use when exchanging currency, only change with central bank policy decisions and open market dynamics. And so far, despite social media buzz and speculative videos claiming massive RV updates, real financial data and central bank disclosures do not support a confirmed RV event for IQD or VND at this time. That doesn't mean nothing will ever happen. Markets are dynamic and monetary policy can shift, but it does mean hype should never replace actual research, especially when millions of viewers and investors might be making financial decisions based on misunderstandings. For example, some online content and commenter speculation suggests that bank employees see the RV in the system. But experts and official commentary repeatedly warn that these are often misinterpretations of internal placeholder rates or unrelated system updates that have nothing to do with an official revaluation announcement. Viewers should also be aware that secondary market exchange rates can diverge significantly from official rates, and that talk of global currency resets, massive overnight increases, or guaranteed returns are narratives that have circulated for years without confirmation from central authorities, and many financial professionals label such claims as speculative or even borderline misinformation. That's why our focus today is not on echoing rumors, but on giving you clear, fact-based context and explaining why contract rate activity does not confirm a public revaluation, exchange window, or immediate cash-in availability, and why the Only announcements that truly matter come directly from the central banks or official international financial institutions. So if you're holding Iraqi Dinar or Vietnamese Dong and you want to protect your investment and stay informed without falling for sensationalism, pay attention to credible sources, monitor official exchange rate bulletins from the central bank of Iraq and the State Bank of Vietnam, and understand that differences between internal contract pricing and public rates are common and do not signal an automatic windfall. Now that you've heard the straight facts, drop a comment below with your questions or thoughts about contract rates and what move you're planning next. And remember to like, subscribe, and click the bell to get notified about future updates. And if you want us to dive deeper into how central banks set exchange rates or what economic indicators really impact currency values, let us know in the comments, because your engagement drives the research we bring next. Thank you for watching, and I'll see you in the next video. Don't forget to hit that subscribe button for more real finance explanations that help you make smarter decisions with the currencies you hold.